We're going to start with Phil Jody, who's a friend of mine, longtime friend, journalist, French origin, who is going to start moderation, and he's going to introduce Mario. Thank you.
Yeah. Great speech. Fantastic. Before to introduce Mario, with your permission, I wanted to just showcase something. I'm a member of the Battery in San Francisco, and they organize a very interesting event. Proud to be a member of this. And they invited me to, me and some other people, to a gallery, vernissage. How do you say in English? Thank you, vernissage. And so it's very interesting. Christine, she's an artist. She's young, and she's doing a very interesting art. It's crypto memes about a woman and Leo DiCaprio. And I will leave the document, and Pimo can help you to reach if you have a few $1,000s to spend in a very big frames. It's fantastic. And it's very funny. And for those who knows about the crypto, the language, it's like hodl. I didn't know what the HODL meant, and now I know. It's very interesting. So you see, it's a great artist, and I think you can still see the frames in this San Francisco Dog Patch venue. It's very nice. So that's for the cultural aspect of the, not just to talk about money and
boring stuff.
Okay, well, we have to do it anyways. Now we try not to be too French. I'm American, by the way. Like you guys. So hold on. So Mario is director of European Commission Directorate General for Financial Stability, Financial Services, and Capital Markets Union. Congratulations. So just to start, the format will be quite simple. We will just have an introduction for our friends coming from Washington and from this beautiful continent, which is Europe. Don't forget to vote on Saturday and Sunday. And then there were a few questions brought by email, and that I will use, but please make it like a very nice moment. If you have any question, you don't need to send an email to Pimo. You can ask for the microphone, and we will continue this way. So Mario, the question is, what are you doing here?
Okay.
If I may say.
Many thanks. Good evening, everybody. Thank you very much for the invitation, the welcome, the hosting, the food, the wine, everything. So thanks a lot. What I'm doing here, as Phil said, I am the director in charge of something called horizontal policies in financial services. What are the horizontal policies? Are those policies that touch all the sectors alike. And in particular, there are one capital markets union, of which I'm sure you have all heard. You have heard of the banking union. And the capital markets union is the sister or the brother of the banking union. It aims at integrating capital markets in Europe. The other policy, which is the horizontal one, is FinTech, the one we will be talking about tonight. Sustainable finance, retail financial policies, payments, maybe another thing of which we will be talking about tonight, and then the whole area of free circulation of capital, which, as you know, is one of the 4 fundamental freedoms of Europe. Phil said it, Europe is a beautiful place for the Europeans to see us on YouTube. Please remember to go to vote this weekend. In the European Union Treaty, we have 4 freedoms, which are, I guess, the same you have in the United States. It is the free circulation of people, capital, goods, and services. And I am in charge of making sure that one of the 4 freedoms, which is the free circulation of capital, really works. Why California? Because of all the things I've said, there are at least 3 things, which are FinTech, sustainable finance, and payments, which in this area are extremely important. I mean, we have met authorities, we have met investors, we have met companies, in these days, and without quoting names because we are on camera, but you all know that not far from here there are big payments providers of different type, and I think with Antoine, who is the financial attaché in Washington of the European Union, we have met all those that we needed to meet. I have also participated yesterday to a conference which I like a lot, and was the second time I participated, which is the Women's Corporate Directors. It's a great conference because it shows to us men what do you feel when you are a man with 200 women around, and this is exactly what women feels at any normal conference where there is one woman and 200 men around. So tonight, however, you did a very good job, Pimon, because I think we have at least a good representation.
Yay, yeah.
And so these are the various reasons why I'm here, and I've seen your questions. Let me maybe say 2 words without being too long, so to give you the context. Of the 2 areas we'll talk about tonight, and I saw your questions revolve essentially on the 2 areas of fintech and payments. The 2 areas are specular in a way because payments is an area in which Europe entered very early. I mean, the first legislation on payments dates back to more than 20 years. Probably a legislation that all Europeans know is the so-called SEPA, Single European Payment Area, and is that piece of law which was done very early, 2001, 2002, that basically says that every single payment in Europe cannot cost more than the national domestic payment. So that is the Single European Payment Area. From that, there has been a number of developments on payments. There are some directives which are extremely popular even in Silicon Valley. PSD2, which I negotiated, I proposed and then negotiated a few years ago as Commission representative, but also the Payment Account Directive, which is another directive around payments. And tangentially to that, there is, for example, the GDPR. Also, GDPR is relatively famous here. Is of course the way through which personal data can be used. As you know, privacy in Europe gets a great value, so we really attach lots of importance to privacy and to the conservation of data. So the area of payment is an area where I believe Europe has really gone further a lot. Is an area where we have both at the same time lots of competition, but also lots of security in the area. And yes, it's an area where regulation is pretty intense. The opposite, of course, is true for the area of fintech. I mean, that is very clear. A year ago, the Commission published something called the FinTech Action Plan. You may have seen it. Basically, it says that it's too early to think of any type of legislation or legislative intervention by now, but it's time to think about at least 3 issues, and these may be discussed tonight. One is the scalability of the fintech activities. Scalability essentially in our European jargon means moving a fintech from the national dimension, where at the very best you have 60 million people if you are a big country, to the European dimension where you have 500 million people. So one is scalability, 2 is uptake of innovation, of innovative things. Of course, is fundamental in the fintech area, and 3 is cybersecurity. A theme which is very close, for example, to the heart of the G7 French presidency, which, as you know, is the current presidency, and a number of work has been done in this area. So this is just a matter of introduction. I was asked not to speak more than 5 minutes. I think more or less that's correct.
Yeah, you see, I'm standing. I'm ready.
You are standing. You are very tall and big, so I don't dare too much.
Yeah.
And voila.
No, and Maybe a question I have is what do you expect from this trip? Because I remember I met Diane a long time ago in 2013. I had a VC company called Truffle Capital based in Paris, with Eric Besson, a French very famous politician, and nothing happened from all those meetings. It was just like, thank you for the time we spent together, 1 hour as usual. That's the price. But what do you expect from I mean, in terms of actions or results, or of course, the camera is here and there's no, but just give us a little taste.
No, for sure. I mean, I can give you a taste both of concrete and immediate things and maybe more long-term things. I mean, concrete and immediate in the PSD2 area, the Payment Service Directive, as many of you in this room know, we have a big échéance, a big deadline now in September, when the stronger method, the so-called strong customer authentication, will enter into force. And today and yesterday was very good to discuss with the unnameable payment providers of this area how they feel about that, and was really a very dense discussion, because they feel differently depending on where they stand in the payment chain, and I think he gave Antoine and myself a number of good ideas. Also, for example, we have been discussing a lot about sustainable finance, where there is a great interest among investors and among asset managers, and we are in California, so that I think was quite heartening. And the discussion on fintech, as I said at the very beginning, our line for the time being is that we need to observe and monitor. We have a number of initiatives to do that. We have blockchain observatory, we have a sandbox lab, and so on and on. And most of the things we have heard went back. So there's much more than thank you for your time. I think Antoine has been drafting a long report, and there are some important points that we're bringing back.
Yeah, the SCA will be running in September?
14th of September, yes.
Yeah.
And I'll tell you one thing. This is so for the last 4 years. People complain it's getting close, but we didn't move September 2019. It's still between August and October.
No, prego. I just want to give also the opportunity to Antoine to introduce himself, and well, don't be shy. Come on, you're French.
Thank you very much. So I'm actually based in Washington, and I have this incredible job of actually interacting between the US regulators and to be the interlink between the EU regulators and the US regulator, which is quite interesting and something that is actually worth doing. So I don't really have anything to say. I mean, it's just more like to listen.
Oh, come on, so you're based in Washington. Okay, and so I guess, as I understand, you're here to create a PSD2 and so on, so you have not just observing, and you put things into action. So is your way to reach out to Mario, because you have people in the room working for big companies interested to do something in Europe, so maybe you might help, I don't know. Just think that, so...
No, indeed, I mean...
Which regulators do you work with?
The SEC, the CFTC, the Fed, all anchoring the OCC, the Treasury.
All the three-letter
So all regulators.
So now we're talking.
Wow.
Good.
No, I mean, indeed, I mean, the job is about talking with regulators, and also like discussing with the industry, and sending report and email to Mario and telling him what they are thinking about our regulation and how things evolving here in the US.
So you're a good guy to know inside of the organization, because you're based in Washington, just 3 hours from California. And
Indeed, but here you can actually directly speak with Mario, which is much more
I
interesting.
know, but we have a limited time. But it's just, if something comes later on. Okay, thank you. So now I just want to, please don't wait for, if you have any questions. I'm going to go through the questions that some people were preparing, but let's make it, don't hesitate to to raise the hand, take the mic, whatever. It has to be, we're friends. So I took for the first one, so from Steve Kirch. Steve, you're here. Did I say the name right? Yes? All right, so CEO of Token. So Steve would like to know why isn't open banking open? Maybe I didn't write this. That's right.
I think it's correct.
Okay, and what has been done to fix it, actually?
Right.
Thank you, Steve.
Okay, thank you, Steve, for the question. I actually believe that open banking is very open. I actually believe that open banking is the openest model. I know you don't say openest, but okay. Most open.
We see what you mean.
You see what I mean. It's the most open banking model in the world. What open banking allows is very clearly allows for some banking functions to be done by non-banks, by the so-called TPP, third-party providers. It's very clear that when we proposed that model and then we had to negotiate it in Council and Parliament, there was a clear deal to be done between opening the market, but at the same time not forfeiting or not compromising on the security of the market. And that's why the deal that has been done is between opening and the SCA, the strong customer authentication. So this is the mechanism. The SCA is of course the modality that has been chosen by the co-legislators, by the Council and the Parliament, to make sure that the third-party providers really act in the interest of those for whom we do competition policies, which are the customers. And I believe that there are no other jurisdictions in the world who have an open banking model more open than ours.
Steve,
And they see
I
lots
can
of
see your
models.
face is not what you were expecting.
Well, no, we talked earlier, so he gave me some insights which I hadn't appreciated before. Because
Okay.
my issue was that in order to call the APIs of any bank,
Mhm.
you have to go through a third party. And if I'm interacting with my bank, I get to talk to my bank directly. Right? I go on a web interface, I can talk to the bank directly, but if I want to look at my balance with the program has to essentially contract with a third party in order to access the bank as opposed to being able to access the bank directly.
Mhm.
And so what Mario explained to me, which I hadn't appreciated before, is that you could think of PISPs, which are these regulated third parties, as the creator of apps, which can allow your app to talk to that app to talk to the bank, so that it's actually enabling, it's creating a secure, it should be able to create secure customer auth within that app, digitally signing in the app. So it's essentially enabling people to create secure authentication and passing through that open, using these APIs through that portal to be able to make the requests. Because the one thing that if you opened it up, there's a danger that someone's going to download an app which says, "Oh, sign here," right? Click here, sign here, and that will authorize a payment that the app then, because it's corrupt, would go and sort of change the payee, for example. And so this essentially, what Mario explained, is that this is a sort of a license for us to create secure apps that people can then trust to be able to be the authenticator for these open banking transactions. So I hadn't appreciated that before, so this was super valuable to me.
Do you see, Pimo, what
Thanks,
you do?
Steve.
You see what you do? You see? You just make
Sorry.
You made it. Huh? Right. Thank you. So, oh la la, so many, do you want, I have a question from Rashida, but she's not here. Yes,
Bill,
madam?
I've got a couple of questions.
I know, I saw them, just, I'm
know
gonna put that
myself.
on the table, and who's the next?
Sure, it's related to open banking, so I thought it might be.
Oh, of course,
Thank you.
Thank you.
So I'm Tasso, I'm with Erna here in San Francisco. I'm also proudly Greek, so I have a question
Actually,
actually.
it's an S normally. because
Tassos,
Tassos.
yes. Actually, Anastasios is the whole
Exactly.
thing. But considering Greece is going through quite a bit of reform, the financial sector, as well as the public sector, the government sector as well. Is this a good time for open banking to be kind of happening in economies going through a recession right now because they're rebuilding the financial sector or reforming the financial sector, or might there be some additional challenges for economies like Greece to implement changes from open banking?
I mean, I think this is really good question, because what I always say to my colleagues when we work in Brussels and so on and on, I say, remember that what we work on is financial services. It's not finance per se, but it's financial service. To the service of whom? To the service of the real economy. So the issue that you have just posed about the recession or the non-recession. Real economy, by the way, is a bad translation in English from the Latin, okay? It does not mean real and there is another one false. It means economy of things. It comes from Latin, res re. So, yes, I think it's a great moment for a simple reason, that open banking, and this is what everybody has told us today, and that's what we have long held, open banking basically increases the number of so-called conversions. So when a client goes to an app in order to look at something, says great. If it has open banking, if it has less frictions, more facilities to pay and so on and on, it pays more. So open banking actually does good to the real economy. It increases the added value of the economy per se. So I think it's absolutely good to push. Also, clearly, open banking, it may pose a challenge, but it also poses lots of benefits even to the banks, because the number of transactions increases. So with the increase of the number of transactions, they have an increase. So I really think it's a good moment, and we have been preparing for years. The PSD2 was adopted more than 4 years ago, so I think it's right to go on. Philip.
Yeah, sorry, is any other question about open banking?
Oh, no.
Dan, over here.
Kind of goes.
He had his hand up.
You sure?
Yeah.
Okay, good.
And so my name is Daniel Edwards. I'm a partner at Angel Rush Ventures, but I also own a FinTech company in London, and we are members of SEPA Instant, faster payments, and kind of the whole open banking part. We're very innovative in the way that we look. We're U.S. citizens, but we've moved over to that side of the pond to go after the fastest kind of payments and the most innovative payments that we think are out there, which are in Europe and the UK. But the problem that we see is when we try
Still the same.
Europe, Europe for now. But what we see as a problem is when we try to connect Europe, the UK to the US, Canada, other places, it's very closed. It's not open. We talk to the clearinghouse, we talk to IFS, we talk to other members, and we say, hey, we're a member of Faster Payments, which is amazing, right? Instant payments, very cheap, and it's brilliant. But you say, can I send a payment in that method to the United States? The answer is no, right? Can I send it to other places like Russia or anywhere else? No. So, we start to say, the world is starting to become very divided on these instant payment schemes. Europe has its own, the UK has its own, the US now has its own called real-time payments, and the whole world is kind of divided. So what do we do about connecting the world in this payment scheme?
This is excellent question again. We started in Europe. First of all, we started taking care about Europe. So what we are doing is trying to elevate national instant payments, for example. And I go along with your example because we are also great believers in instant payments. So we are starting to elevate national instant payments to the level of Europe. Then it is true that while in other areas of the banking world there are global means to regulate, think of the Basel Committee. I've been sitting myself representing the Commission for 7 years in the Basel Committee. The Basel Committee will regulate things like capital, equity, liquidity, operational risks, and so on and on, but we do not deal with payments. So the question you are posing, and the reason is essentially that, I believe at least that the reason is essentially that for the issues that are dealt in Basel, there is supposed to be a very, let's say, an impact cross pond, so to speak, but even Russia, Japan, and so on and on, much bigger than for payment. For payment, what you represent is a terrible nuisance. It's certainly a loss of opportunities. So certainly is something which does not allow the world GDP to grow more. I think what would be needed would be an international development, and there is something called CPI IOSCO, and we'll need that to take the matter of instant payment on them and probably to develop. I don't think this is out of any possibilities. Actually, I think that it may at some point materialize.
I mean, I think that's the reason people see hope in crypto, right? Because it's a payment system that really bridges all these different divides, and that's what gives people hope. But it's not the solution we're looking for, right?
No, of course you cannot.
Is that what you believe as well? There's different.
No,
solutions.
I believe. I mean, as we always say at the Commission, in the European Union there is only one currency, and it's called the euro. So the other crypto, whatever, we don't think it's not comparable in whatever terms. I mean, I think only magnitude to start with, or ability of the euro to store value. I mean, it's uncomparable to anything else. So it's there where we need to work. It's on the currency we have, which has proven a phenomenal instrument of stability, and work on that.
So we have still half an hour, so I saw the hands rising, so don't worry, I won't forget you. I just want to be on the same kind of topic. Is this where we're in, the next questions on the, no? Connected with what Mario was saying, open banking and stuff. Okay, so I'm coming to you, and before that, no, it's fine. Just don't worry. I like to walk up to walk. No, just don't worry. Relax. Just if you mind. No, the Ken was because Ken had a question about the PSD2 and GDPR, the perspective onto the interplay between the PSD2 and GDPR. You were mentioning that, so I thought it was a good transition. And then well, I'm going to see you right after. So if you can address, Ken is here, that's his question actually.
Okay. PSD2 and GDPR, I mean, they're obviously complementary in the sense that GDPR deals with personal data and the way personal data may be kept, may be stored, may be transferred, and so on and on. PSD2 goes one step further in the area of payment, of course. GDPR deals with the fact when you use your data, for example, because you send a CV for an application or whatever. So GDPR is on the whole universe of the use of data. PSD2 deals with the moment you use data to do a P, so a payment. And in that respect, what the PSD2 does is basically to go one step further with the strong customer authentication, and by going one step further with the two steps, the strong customer authentication, and so on and on, it basically reinforces the protection of the personal data that exists. Again, today, when we were in the Valley speaking to the various payment providers, they all insisted telling us that, of course, the data they have about us, they get anonymized, encrypted. They don't know that this morning at 8:53 I had a cappuccino, and they do not, they basically make sure that these extremely rich data, because the truth is that some data have a content, but the payments data are extremely rich. If you can look at the expenditure I do every day, it means basically you know my life in depth, much more than if you know my name, surname, date, and place of birth. So I think it's quite natural that for an act which is probably a very private act, like the one of paying something, there is an additional protection. So the interaction between the two is certainly that the PSD2 takes the protection of the personal data one step further.
Okay, so we have Perla here, then Matthew, and then finally we can speak about cryptocurrency and blockchain, for God's sake. Thank you.
So based on the past question,
Louder.
okay, sorry, louder. You know, in being here in the United States and I work for a payments company, but also being embedded into the banking community quite a bit, you see from a banking perspective how they think fast payments and all of that is such a good idea. Oh yeah, Europe's doing it, that's great. But when it comes to actuality, they see such huge challenges because our banking infrastructure here in the United States is quite fractured. And the amount of investment that it would take for us to do a really a fast payments initiative, it would just be quite costly to the level that, like, for example, it's already in Europe. So do you feel when you're having a lot of these conversations here in the United States that you are truly penetrating the US market and that like it is gonna become a reality sometime in our lifetime? Because I feel we just got chip, and I think you guys did that like 12 years ago. And that was revolutionary here. So, to get tap cards, that would be, God knows how long that would take us. And I feel that, these are all great ideas and they go to these conferences and they say yay, but at the same time they understand that it's a very long way away.
I mean, of course I'm not a connoisseur of the US system as much as of the EU system. So, but what I can observe, and we have observed in these days here, and of course we go much more often on the other coast, I'm afraid, on the East Coast, where most of the banks are. I have noticed lots of interest into the instant payment. I mean, instant payment is clearly quite revolutionary. It touches all generations in this society, if you want. It's a very democratic, new model, new technology. In Europe, has been developed quite interestingly through a private platform and a public platform. So there has been the conjunction of the two things. There is a very clear support by the authorities in Europe. So both the ECB and the European Commission last December, we made clear that we think that this is something that should be developed. So probably there are a number of, let's say, endogenous factors which are different between EU and US. So I cannot say whether it will happen in the EU or not. What I can say for sure is what will happen in the US. What I can say for sure is that while being here, I observe lots of interest in what is happening in the EU. I get asked many times what is happening in instant payment, and I get it asked both by your colleagues, the payment companies, but also by others, the merchants, for example, because the merchants are very much interested into the instant payments, and in general is a question that gets asked. So probably there is interest. Voilà. But the conditions for this interest to materialize in something concrete, arguably now they are different, starting with the conditions and what the authorities think.
Matthew?
Hello, Mario. We shared the
panel
yesterday. That was fun. Today I'm asking a question wearing my Chairman Securitize Europe hat. And firstly, let me applaud you and your team. I think you're doing the hardest job in the world, which is to make sure that you maintain the learnings of the past while setting policy that allows us all to innovate and move forward. And you're doing a great job relative to many parts of the world. But my question is about the enforcement of policy. So at Securitize, we are a fully compliant STO platform for the world. It's been very expensive to build it. It's taken a long time. We look at Europe and we see many promoters, issuers, and exchanges that are completely non-compliant to EU policy and global policy. And they're in Gibraltar and Malta and Lithuania and Luxembourg and London and so on. How does the enforcement of EU policy happen, and why are they allowed to continue to operate?
Okay. What happens is that there are some financial services which are passported and other financial services which are not passported. So these are the two regimes. The financial services which are passported means that when you get the authorization by any country to enter in that country, you automatically get the authorization to enter into Europe. And that happens to the most common financial services, banking, securities, and so on. You know? Other services, for example, I don't know, credit recovery, just to mention one, you do not have the passport. You get the authorization in one area and you remain in that area. Now, on the one, so for that second instance is a national issue, so there are no counter incentives. For the first instance, which is the passporting, there is a first filter of the incentive of the country that authorizes to authorize correctly by the fact that this company is also operating in the same country. So that should be the first filter. And then you touch to an area to which the Commission and the Council and the Parliament looked very recently, which is what is the role of the European supervisory authorities. So should we, for some services, give more power to the European supervisory authorities? So we had very recently an ESAS review, the ESAS are the European supervisory authorities, a review of the ESAS trying to respond to that question. In some areas we have advanced in the power in Europe. It's very clear that whenever the service which is offered has truly a European value, one legitimately poses the question whether the fact that it is mostly issued by one place rather than another place does not overburden that place with European responsibilities. And I think that is a very legitimate question to pose that we have tried to address. The experience tells that this is something which is done progressively, very, very progressively. In some areas now is absolutely recognized as normal. Think of the area of the credit rating agency. Their authorization, supervision, it's all done at the European level. There's no national supervisor, mediation, so to speak. In other areas, we are a little bit less advanced. So clearly, it's something that goes progressively. In case there is an obvious breach of law, well, in that case, we have a procedure which I think is judged as very fair, albeit severe, which is the infringement policy, which the Commission does regularly. We start by writing to the member states the letter of formal notice, then we write to them, then we see what they say, and then if we are not convinced by what they say, we do an avis motivé, so we write to them with an avis motivé, and then if we believe that we are not satisfied by their reply to our avis motivé, we go to court. And we have gone to court a number of times, very recently, and more often than not we will.
Thank you, Mario.
Can I just add something, or pretty much ask?
Manette, you're more than welcome, because I was about to ask your question, so
Okay.
please, you can then switch to the blockchain.
Take mine.
Yeah,
All right.
sorry, what I wanted to ask as a follow-up, was with respect to the, crypto and blockchain, when we're looking at global issuances, you're looking at investors coming in from, all over the world, which are trying to invest in various types of financial instruments. How is the EU looking at this with respect to these types of issuances, particularly with respect to the London Stock Exchange, the Swiss Stock Exchange, some of the larger exchanges starting to do digital securities on it as ETFs?
Actually, we have done what I think any authority does in this case, that we have asked to our supervisor authorities for an advice. And our supervisor authorities, they have given us an advice which is relatively clear. It basically says, look, some of the instruments may be covered by the current legislation, with or without some stretch of the current legislation, and some other instruments are clearly not covered or coverable by the current legislation. So we are going now This has happened relatively recently, and we are now going through those two things and try to understand in the first case, so those instruments that can be covered by the current legislation, whether it's the legislation as it is or it needs some change. And for the other, like always when we plan to do any additional legislation, we are first of all try to look at the impact, whether the impact is material or is not material, see what the stakeholders say, whether the stakeholders think that it would make sense to have a regulatory intervention or not, and then we will decide in due time what to do. I mean, the point here is very clear that Europe is not rushing to regulate things that for the time being we haven't yet grasped and understood, and things which are changing a lot, because there are many things that emerge, survive a couple of years, and then they disappear. So we are waiting to see how it goes. Till now, the authorities, the supervisory authorities, have issued a number of warnings in the past, and so on and on. So I think we have the first phase, which is the one of transparency and awareness, has been made, and now we are examining the second phase.
Diane, you wanted
Yes.
to, yes, you finally, it's time for your question.
I'm going to shift gears a little bit here. If you look at your trip here, which I think is fantastic, you're here, and you look at innovation and what drives innovation, my thesis is innovation is driven by venture capital investors investing in entrepreneurs. Good news, TransferWise, $3 billion valuation yesterday, so Europe has some activity, and yet China passed up European venture capital investment like it was standing still. The US still dominates, and you do have people like Feedzai who moved from Portugal to here, the Collison brothers of Stripe moved from Ireland to here. What are you doing to ensure that venture capital thrives in Europe and drives innovation with the fintechs, with the entrepreneurs, and rewarding those entrepreneurs disproportionately, as America does, as well as building a venture capital net that allows that to happen so that the next generation of great fintech startups is from Europe, not from China?
Okay, I mean, first of all, I mostly agree with you that availability of finance to the new business is probably more promoting the business than banking credit. I mean, today we went to visit that famous place that was born from a garage and became as large as a stadium, and actually slightly larger than a stadium we learned, and is absolutely impressive. And very recently, within the so-called Capital Markets Union Fund, Europe has promoted something which is called EuVECA, which is European Venture Capital Funds, which is a product that we believe has some potentiality to attract the investment of those that, Europe is an area of the world where there is lots of saving. The issue is not about generating saving, the issue is about canalizing saving. Probably the risk attitude is a little bit less than in the United States. So we suffer with respect to the United States a lower risk attitude. With respect to China, of course, we suffer a dimension gap, because when you do crowdfunding, the crowd in China is a bit bigger than the crowd that we may have in Europe. So, but I believe Europe remains a very open area. So we may be sorry to see someone leaving, but it's in our DNA, is the logic of how Europe has prospered since, well, before it was Europe. If you think that, the Hanseatic League of the 1500 and so on and on, there's always prospered and developed through trade, basically. That is what characterize most of the Europe dealing. So we are certainly not, and we are against any barriers, and this is well known. I mean, our policy on this is well known. So definitely, what we are doing is try to scale up national instruments. The fact is that the moment we do Capital Markets Union is because we have some capital markets at the national level, but we don't have the scalability at the European level. And that's an area where we are trying to work. In the banking sector, we had it actually. As you know, European banks are much bigger American banks, and the first 9 European banks have more money than the whole government of Europe. But there, because there was institution building and so on and on. In markets is more difficult, but we are creating instruments. Another, for example, we have just now done a pan-European pension product, which also tries to attract investment, and therefore this investment may be used for long-term activities, which is typically equity investments.
Well, thank you. It's a pleasure to have this great crowd, amazing questions, and I mean it, I'm American, but still a lot of French layers, and you really goes, straight to the point, and I think I'm breaking something there. You wanted to say something, people,
Yes.
and
My apologies. I wanted to thank Mario. That was really good. Thank you so much. Really appreciated your feedback and your answers to the questions. And my bad, because I didn't actually introduce the Shepard Mullen attorneys. And I wanted to do that now. We've got Colleen McDonald. Do you want to stand up for a few minutes?
A few words, if you want to say
Thank you.
something.
Thank you all for coming tonight. I see familiar faces from San Francisco panels that I've attended. I'm in the San Francisco office. Colleen McDonald, I'm a structured finance securitization attorney, so I'm very interested in the capital markets. Payments fascinate me and confound me, and my clients. But we've so enjoyed our relationship with PEMO and the Silicon Valley FinTech group and all of you, and just so glad to have a great turnout tonight, and hope you all enjoy the rest of the evening.
Thank you. And so Bill Lambert?
Bill Wyatt.
Bill Wyatt, sorry.
Yeah, we're the Bills from Palo Alto. Bill Lambert.
Easily to get
Only their mother
confused.
can tell them apart.
Thank you.
Like Colleen, I'm a finance lawyer. Bill Lambert, let's speak for himself, is an IP lawyer. But we're both kind of interested in these kinds of developments sort of from different points of view. Since I'm a finance lawyer, this sort of innovation is eventually going to change the way that my clients do things, but so far they really haven't. And Bill's clients are the ones who are trying to figure out how to do these things and how to protect them under the IP laws. So thank you all for coming. This was very interesting.
Yeah, really.
Bill Wyatt?
I'm Bill Wyatt.
I'm not the mother.
Yeah, so thank you very much for coming. I come to all these events. I hardly understand what's going on here because I don't have a financial background. Eventually, it'll all sink in. So thank you very much.
Thanks so much. I have to thank Shepard Mullen because really we wouldn't be here today if it wasn't for their support, and great people, and really appreciate all the efforts that you guys put in, and if you need an attorney, come to Shepard Mullen. And I want to thank you all for coming. Really appreciate that. So good to have such talent and smarts in the room, in one room, and all together. So we've actually got half an hour now if you want to network, and thank you so much, and thanks again, Mario.
Thank you very much.
Thank you.